Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Newsroom. I'm your host, Khalid. But today is the 14th of March 2023, and these are the stories that we will be discussing in detail in the course of the show. We'll begin with the financial crisis that has struck the Silicon Valley since the bank failure of the 2008 financial crisis. This is a new financial crisis that has hit the United States, and the repercussions are going beyond the US, even in the European Union. Now, the Silicon Valley Bank collapsed. What happened? We will be discussing in detail as far as to what the repercussions of that has been on the financial system in the United States of America. There has been reassurances by Joseph Biden as well. At the same time, the global markets who have been gripped by the collapse include Credit Suisse, that has fallen by 4%, and 382 billion euros of bank stocks have been wiped off the banks. This and more will be discussed in the first segment. Our second story of the day, ladies and gentlemen, concerns the world responsibilities towards illegal migration. We have discussed that in previous shows as well, but the fact remains that illegal immigration continues throughout the world. 30 people are missing, 17 have been rescued in the central Mediterranean Sea on Sunday after the boat in which people were traveling from Libya capsized in bad weather. This has been stated by Libya's Coast Guard. Very recently, just a few days back, February 26th shipwreck is something that we had also discussed and highlighted in detail, but the process continues to go on. What is the responsibility of the different governments across the world in order to handle this illegal migration properly? This is going to be our second segment. Let's come to our third story, and that concerns Punjab Culture Day that is being celebrated across the province today. Various messages of congratulations have poured in on social media platforms by our leadership, and of course Punjab is a very vibrant province of Pakistan, and you know, we have a lot of traditions, a lot of color, and that color is being represented in this Punjab Culture Day. Today has been, in fact, all day long. We are in the evening. And finally, we'll be talking about the Senate that is to celebrate its 50th anniversary with a 3-day event which is going to begin tomorrow at the Parliament House in Islamabad. Various events are also scheduled to be held in this very regard. So a lot of celebrations. Nevertheless, we end on a very positive note. Let's begin with our first segment, and that concerns the financial crisis that has hit since the collapse of the SVB in the United States of America. What kind of repercussions has that had on the US and on other stock markets across the globe? More in the following report.
The collapse of Silicon Valley Bank, the biggest bank failure in the United States since 2008, has sent shockwaves through financial and tech circles. United States regulators seized the assets of Santa Clara, California-based bank after depositors began withdrawing funds massively amid fears over the lender's financial health. Financial regulators around the world have raced to contain the fallout of SVB's collapse and shore up confidence in the global financial system. Silicon Valley Bank's business focused heavily on US technology startups. During the COVID-19 pandemic, the lender saw a surge in deposits as tech companies profited from providing entertainment and delivery services to people confined to their homes. SVB's troubles began when the United States Federal Reserve started raising interest rates last year in response to soaring inflation, causing the value of those bonds to fall. As economic conditions for the tech sector became more straitened following the pandemic boom, many of SVB's customers began to draw on their fund. 2 days after the collapse of SVB, US regulators seized the assets of Signature Bank, a New York-based lender known for its business with the cryptocurrency sector, marking the third largest bank failure in US history. Bank shares, including those of the US Big Four, JP Morgan Chase, Bank of America, Wells Fargo, and Citibank, have dipped sharply amid fears of contagion across the financial sector.
Dr. Usman W. Chohan, economist, joins us online. Usman, it's always a pleasure to talk to you when it concerns our economy or the economy of the world, because the discussion always remains extremely fruitful for myself and the audience. Let's begin with what happened since Friday, when the collapse of the SVB happened, and on Sunday, the Signature Bank was also closed down to prevent a crisis in the broader banking system. There has been such a lot of repercussion of that in the US financial system and in the European financial system as well, and it is continuing as we speak. Why and how did the SVB fail?
Basically, what you have right now are the repercussions of incompetence. Supreme incompetence at a core institution in the global financial system, which is the US Federal Reserve. They, if you remember, pumped in a ton of money in 2008 when the financial crisis happened without patching over the real problems of society. Socioeconomic problem. And they pumped even more in 2020 with COVID. And again, it didn't go to the regular people, unlike our stimulus here in Pakistan. It went to the big corporations. So much money was put into the system that it helped to perpetuate a systemic inflationary tide. Then the Fed thought that this is literally their words, transitory. That this is just because we're reactivating the world economy after COVID, that inflation is not a big deal. The thing is, it was. And it was because they had pumped so much liquidity into the system since 2008 and 2020. So then they raised rates at an unprecedented pace. They raised them so fast that the rest of the world couldn't keep up. Now, the first dominoes to fall were actually some emerging markets. You are well familiar with what happened to Sri Lanka, as well as to countries now that are in distress, such as us and Egypt. The thing is, the American system is now also facing the repercussions of that supreme incompetence of the US Federal Reserve. Now, if you want more details specifically on SVB, how the mechanism works, it is that
when it comes to the SVB, I'd like to understand, Usman, I was going through it, and they said that they used to keep a small chunk in cash. They used to ask all the depositors to invest in treasury bonds, and when all of that didn't comply with the way, as you yourself have explained, curb the inflationary rates that had gone far too high, it resulted in the collapse. This said, do you feel that all of the problems of the SVB were just related to high interest rates?
Absolutely. I mean, that is the core of it, and that's why the whole global financial system is having convulsions. At the root, it is this. SVB, in that liquidity-rich environment, decided to get some extra yield, some extra kicker from the deposits, because banks work on the spreads. So they needed something to get a good spread when actually the world wasn't paying much. It was a low interest rate environment. So they did the 10-year bonds and so on. Their exposure was about $120 billion, right? And their deposits were $200 billion. And these are really big numbers. And when the interest rates go up, the value of the bonds that you currently hold fall, because now the government will issue new bonds with higher interest rates for the same durations. A new 10-year bond will come up which pays 6 or 5%, and what you owned is only paying 1%. So high yields means the prices of bonds sink. And when you're talking hundreds of billions or tens of billions of dollars at any one point, that means that when people snap onto it, they will run on the bank. And they will try to pull out their money, knowing that these guys will be in a deep duration mismatch between what they will.
Usman, here I'd like to say something that Joe Biden quoted. He said, no losses will be borne by the taxpayers. Let me repeat, no losses will be borne by the taxpayer. But let me add this little phrase. He said that investors in the banks will not be protected. What does that bode for investors?
Extreme disappointment, but this is what moral hazard is all about. In economics, we talk about moral hazard where you do bad behavior because authorities have authorized you to do bad behavior, to conduct bad behavior. That's what 2008 was about too. Now, what is happening is that there's a corporation, the FDIC, which secures you for $250,000. The thing is, SVB had many deposits or accounts with far more than that. All of that is being protected. That is on the depositor side to keep the systemic risk low. But that doesn't mean that the executives, they are decapitated. And the investors who hold shares in this, they are in big trouble because they will not be protected. So that is why, as your report correctly mentioned, the banking stocks everywhere, or the financial sector within the investment universe, equity universe is falling because of a risk that it might spread, even though it won't necessarily spread because depositors have been protected.
How widespread will this fallout be? I was just going through some of the statistics before I came to the studios. They were saying Credit Suisse had fallen by 4%. And this market panic that has been caused by the collapse of the SVB has wiped 382 billion euros of bank stocks in the recent days. And then there are so many other banks that have been affected by it. How long, how widespread is this collapse going to have as a repercussion?
There's two elements to repercussions. One is sentiment, and sentiment has been devastated. People should have seen this coming, that ultimately in a new paradigm of high interest rates, all of the people who have exposure to low interest rate strategies will be in trouble. Sentiment is devastating. But as far as actual contagion, there are some other banks. Now, if I mention their names, I mean, one that's being talked about a lot is First Republic. And there's a few others like that that have similar problems
Signature
in
Bank,
terms of.
why not talk about Signature Bank that has been closed as well on Sunday?
Oh, because that's already in the red. There's Signature, there's SVB. That's fine. But what could be next is what we're
Yes.
really worried about. And
Do
so
you feel
First
that
Republic.
many banks are going to be next as far as the US financial system is concerned? Do you feel the US regulators or the US government will be able to handle it the way it handled the 2008 crisis?
Well, I don't believe that they handled it particularly well in 2008. They
I
say
know.
that things were much worse. They say that things would have been much worse, but that's counterfactual argumentation. The thing is, if you don't address the systemic problems, the structural problems in society, and you just put a lot of morphine into the system, ultimately the morphine wears out. Now, here is the problem, because you have asked such a beautiful and important question, who will be spared? I feel that there is a too big to fail mentality, and it's very difficult to identify who is too big because it seems like because SVB was like in the top 20, but it wasn't in the top 5. So who is too big now? Is everybody too big? Well, then what is the relationship between the banking system and the government if the government is going to protect everybody? And then what the incentive is for depositors is like it doesn't matter where you put your money. You just put it where you'll get the highest return. Ultimately, the government come and bail you out. And that has a very negative consequence on capitalism.
All right, when you talk of consequences, I'd like to understand in 2008, in the aftermath of the crisis, the Congress had passed the Dodd-Frank financial regulatory package to prevent any such collapse. A lot of experts are saying that that package was also faulty in its origin. Is that the case?
You have to go a little bit further back in time to the Clinton administration, and basically they began to revoke the rules that had existed since the Great Depression. They had learned very serious lessons about banks in the 1920s, 100 years ago. And in the 90s, they started getting rid of that, so Dodd-Frank was a response to try to bring some of that back. It was very good, very tough in terms of keeping capital ratios and all that stuff. But the fact is that banks also respond to a system and a set of rules. And if the Federal Reserve is going to do knee-jerk things, what it has done in terms of increasing interest rates is equivalent to knee-jerk reactions. And we aren't clear on what the Fed will do next because it is committed to a path of interest rate rise. And that means that even as it is seeing the signs of things teetering on the brink, like these private banks, it still has that trajectory to go through. Otherwise, you de-anchor the expectations of the market towards your trajectory, and then people will have no idea where interest rates will go. Right now, they're following a trajectory, even as there are casualties on the side. So they're caught between a rock and a hard place, and that's why my argument about incompetence, it affects you and me sitting here. The fact that there are no dollars in this country, or there are very few dollars, is attributable to the Fed raising rates so fast. It's the same problem that's affecting the whole world. So you really have to think about how our global system is structured. And you've correctly mentioned that Europe is being disproportionately affected because of something happening in California.
That is so true. But Usman, do you foresee a broader meltdown in the coming days? In your point of view, you just said that we in Pakistan are also being affected by this financial crisis in the US. But in the coming days and weeks, if this crisis is not controlled properly by the government or by the financial agencies in the US, what is going to happen to the global system?
I mean, God forbid. I think that they are taking strong measures, and I do sympathize with the regulators who are acting quickly, acting to protect all depositors at all costs. I think it is very important to do that. But it also shows that they are more of a trauma and emergency ward. They are not there on the R&D or the serious doctor stuff to remedy how the financial system works. And your question, to add to that, is what could be the financial devastation? Well, you would have basically a panic in the equity markets, in the bond markets. I mean, the secondary bond market would freeze. There'd be no movement in it. So basically, whatever system has been working would be paralyzed. I mean, that's the worst case scenario. And I don't think that will happen because regulators have acted to this emergency in a timely manner. But the thing is, nobody really knows how far it can go. There may be many other banks who are equally exposed with a duration mismatch because the interest rates are rising and they're stuck with these now degraded bonds, devalued bonds already on their balance sheets.
Now, do you feel, Usman, also that the repercussions as far as this financial crisis is concerned might affect other systems as well, including the technological ecosystem across the world and in the United States of America? Do you feel there's going to be an indirect effect on it?
Yes, I think this is a very important question to ask. It's not just about the financial markets. Financing is supposed to be something that facilitates economic life, but it isn't economic life itself. So there's the Wall Street and there's the Main Street. And is Main Street going to be affected? Yes, because you have to see which two out of the three banks that have already collapsed, what they were doing. Signature Bank was very important by facilitating transactions with cryptocurrencies. And you may well know that the cryptocurrency markets have taken a very severe beating since 2022 as part of the monetary contraction, because a lot of money that came through the previous pumping had gone into crypto. This facilitator is now in trouble, really in trouble. Finished. And SVB was a facilitator for startups. So its risk appetite was larger than traditional or bigger banks because it would work with Silicon Valley startups and help venture capitalists to do that. So these were important functions in which they specialized. But there are other banks that fill other niches within the US economy, and they might equally be exposed, and therefore the users, the end users in that sector may be severely affected, as crypto with Signature and the tech startups with Silicon Valley Bank.
Shares in other banks, for example, including First Republic Bank, that's a regional bank, have been down 60% on Monday. Do you feel other banks' shares are also going to be reduced in the coming days or as we speak?
Yes, absolutely. The general sentiment towards equities has been very negative since 2022. It's an asset class where a lot of money had gone after 2020. Do you remember this paradox when in 2020 the whole world economy was essentially paralyzed, but the stock market was booming between March and June 2020? Does it make sense to you that
No.
the financial markets are doing so well when the economy isn't working at all? So because of that binge, now you're getting the opposite thing where COVID is over and things are beginning to work, but the financial system on its own is having these convulsions. And so, yes, I believe I had mentioned First Republic to you. You have reiterated the name. There are other banks that will similarly fall in stock prices. Therefore, what has been a culture of risk taking and not timing, not anticipating inflation, not taking it seriously, and then also being held hostage to the incompetence of the Federal Reserve, that is very difficult for, I mean, what is an executive supposed to do these days? You are held
Let's talk of
hostage.
the executive. Let's talk of the U.S. executive. Now, Monday morning, President Biden reassures Americans that the financial system is stable and that customers' deposits will be there when you need them. Also, Treasury Secretary Janet Yellen says on Sunday that regulators have been working over the weekend to stabilize the SVB. But there are reports of the FDIC that it has begun an auction of the SVB that was set to wrap up by Sunday afternoon. Then also the FDIC has invoked a systemic risk exception which allows the government to pay back uninsured depositors. So many reports. What do you make of it? What is the ultimate conclusion?
It goes back to our previous discussion, which I think is very important for the audience to understand, is that this is a systemic risk exception. How many more exceptions will happen? Is everybody an exception? If they're an exception, then they are the rule. Therefore, the rules have changed. And that's what I think markets are responding to. You see all of these statements that are coming from important people. They are meant to try to calm a very panicked community. But the community of investors talks to each other. They follow the Twitter. They follow shows like yours. They all are in getting signals from one another, and they can only respond to an authority to some degree. They ultimately are accountable to their immediate stakeholders. That means that they have to protect them. And to be on the safe side in a panicked market, they may still act against the reassuring claims of authorities. Even in the UK, they have, because there's an SVB UK also. The UK regulators
But they have said
have
that
said,
the SVB in the UK is a smaller bank. The effect on the financial system in the UK is not going to be as significant because the SVB bank is quite a small one in the UK.
That's correct. And in addition, HSBC has been asked to take care of it so that the UK taxpayer doesn't deal with it. The same claim has been made in the United States. So the question is, the taxpayer, that is more of a populist sentiment because taxpayers still bear a resentment from 2008 where things were saved but nobody was punished. So that whole reassuring and signaling is important, but I'm not convinced that the market is going to respond automatically to such reassuring messages. They all have their vested personal interest to protect first and foremost.
Usman, let's talk about other banks as well. Western Alliance in Arizona has tumbled 45%. KeyCorp and Comerica have tumbled 30%. Zions Bancorp in Utah has fallen by 25%. You talk of this whole sentiment of risk taking that has led to this. Do you feel a normal customer, a normal citizen that wants to put his money will no longer be putting his money in shares? He will be more conscious and there will be less of risk taking in the future as a result of this financial crisis?
At least, yes, at least for the immediate future, let's say 2 to 3 months, there will be a jitteriness among ordinary people. And I'll share with you some personal experience, because my early career was with global equities and so the share market and all that. And I witnessed 2008 from very up close. I was in North America at the time working in this. So I understand how the panic and the animal spirits can actually detract from sound analysis. There are very decent, financially sound, not exposed banks that will also be victims. And part of that is the asset allocation that investment managers do. When they see one problem in the financial sector, one bank or two banks, they tend to reduce their exposure to the whole financial sector and go towards something more conservative. They may even hold cash. Similarly, they may do, if they're at the asset allocation level, they may go out of equities altogether and go towards bonds, because bonds are becoming nicer, more attractive, new issuances as the interest rates rise. The old guys are in big trouble, but the new issuances. So there's asset allocation and then stock selection, sector selection decisions that impact how investors with large, tens of billions, hundreds of billions of dollars think about this stuff. And so I understand that there are banks that are in decent condition with fine, pristine, almost balance sheets.
But Usman, tell me, why are banks such as Citigroup or Wells Fargo, Bank of America much more stable than the other banks? What is the reason behind it? Is it their strategy? Is it their financial mechanisms that have stabilized them more compared to other regional banks?